The global financial system is currently navigating a period of significant tension, with geopolitical events and trade fragmentation shaping the economic landscape of 2026. Growth is projected to hover around 3% as nations prioritize strategic autonomy, leading to a shift away from the highly globalized trade models of the past decades. Private credit has emerged as a massive $41 trillion market force, increasingly filling the gap as traditional banks face tighter capital and regulatory constraints. Banking is entering the agentic era, where semi-autonomous AI agents now handle routine trade accounting and compliance, acting as digital coworkers for major firms. Tokenization of real-world assets is accelerating, moving ownership rights onto blockchains to enable faster, more transparent, and cheaper global settlement cycles. The Middle East conflict has introduced significant volatility, causing energy price spikes that ripple through supply chains and weigh on global growth projections. Central banks remain in a delicate balancing act, trying to curb persistent inflation while avoiding policy moves that could destabilize fragile financial markets. Financial deal-making is favoring scale and cost efficiency, with megadeals over $5 billion becoming more common as firms seek to consolidate resources and power. Emerging markets are facing a dual challenge, balancing their integration into global value chains with the need to protect their economies from external shocks. Public debt levels in many major economies are at historic highs, raising concerns about fiscal sustainability and the capacity to respond to future emergencies. The integrity of public data and the interoperability of payment systems are being tested as states deploy economic statecraft to serve their national interests. Institutional credibility has become a central focus for investors, who are closely watching how political pressures influence the independence of key global banks. Commodity markets, particularly oil and gas, remain highly sensitive, with disruptions through key shipping lanes creating ongoing risks for global production costs. Artificial intelligence is being integrated at an enterprise-wide level, with financial institutions expected to add massive value by automating complex investigations. The shift toward a fragmented system is imposing an economic drag, making international cooperation more essential yet harder to achieve in the current climate. Banks are increasingly partnering with private funds to transfer risk, a practice that regulators are watching closely to ensure overall system resilience remains high. Investors are displaying signs of caution, moving toward safer assets as they wait for more clarity on interest rate trajectories and geopolitical developments. The rise of stablecoins is transforming how payments move across borders, with significant adoption already visible across the Asia-Pacific and North American markets. Structural headwinds like aging populations and declining loan demand are putting long-term pressure on bank profitability in several major developed economies. The future of the global financial system depends on our ability to rebuild institutional bridges while managing the risks of a more fragmented, digitalized world.